Hello and welcome to another update video about GALA. A few days ago we talked about this structure here in detail. I assigned an Elliott wave count, which is a bit questionable. Generally that's just due to the structure of this chart, because we're dealing with very corrective looking patterns. So you have a lot of overlap there. It looks like a C wave to me. So basically that all of this is an A, B, C structure, and the C wave is an ending diagonal. And in that update, I highlighted that this ending diagonal could technically be finished. We're just watching now for basically a breakout of this pattern, of this wedge pattern. These ascending wedge patterns often do break to the downside. If that happens, then it could give us this B wave pullback into the support zone. The support levels haven't changed, still relevant, and support is between 1.48 cents and 2.06 cents, between the 78.6 retracement and the 38.2 retracement. Important would be for a more positive outlook, to remain bullish short term at least, and that it follows this wave count, that the price is holding above the 78.6 retrace. Ideally, we don't even go down that much, okay? So what I would like to see, and that would be perfect, would be here a pullback, a B wave, and then possible rally that could set us up for a more substantial rally into next year. And that would also finish off this inverse head and shoulders pattern. Now, again, we don't need the right shoulder to break out, but if we want to get a B wave pullback, or if the market wants to do a B wave pullback, and to be honest, with this overlapping price action, which indicates exhaustion, a pullback is due, but then this would be the ideal spot to do it. Okay, it could still get another squiggle higher. I mean, it hasn't even, I think it hasn't quite reached that horizontal resistance level. No, not quite, but it's nearly touched it. So we are very close anyway. Surely it can get another move up, absolutely. But if we get a sustained break, then I think it can go quite aggressively, even without a pullback. But what I want to communicate is here, if we get a corrective pullback, first of all, it's likely that we get it. And also, this ascending wedge indicates exhaustion. It's only an indicator. The price always has to confirm it, of course. But yeah, if we get a pullback in this corrective, we have a nice setup, a nice pullback trade setup that could support basically a rally into 2024. And in addition to that, it would form this inverse head and shoulders pattern. But it's not a clearly impulsive structure. So we're dealing with unreliable corrective structures. Like I showed you, my concept would be to count this as an ABC structure, which is then a larger A wave. Then we get a B wave pullback and a C wave rally of a larger A wave, then get a larger B wave and a larger C wave, and so on. And then it would sort of escalate higher slowly. But yeah, I think the levels are still relevant. The support levels are still the same as I communicated in previous updates. Even this ascending wedge pattern is still the same. And in green, you can see structural support, which is partially overlapping with these Fibonacci support levels, but not all of them. So we have, in addition to the Fib levels, additional structural support at 1.8 cents, and then here 1.64. Also, if we take a look at the indicators like the MACD or the RSI, let's zoom in. Indicator wise, I mean, the daily ones are really the most reliable ones. I mean, yeah, longer as well, but anything below daily changes just too quickly, in my opinion. So looking at the daily chart here, MACD, bearish divergences up here, okay, while the price is still pushing higher, and momentum is increasing, negative momentum is increasing. And if we take a look at the RSI, bearish divergence, also here, still in the bullish range, so still above 50, but we see this bearish divergence. Now again, divergences always need to be confirmed by price, but it looks as if the price wants to break out of this wedge pattern to the downside. It looks as if it broke out and is just retesting it from below. So that's going to be interesting. If we now break below the last low at 2.45 cents, that could trigger quite a rapid move to the downside, closer towards the yellow box. We have some support levels, for example here, 2.2 cents and then 2.06. Yeah, let's see. I mean, if really this ending diagonal was finished, then I have to say I would typically expect quite a rapid sell-off. If it is not rapid, then it might as well extend higher. The thing is, to really confirm a top, normally after a diagonal breaks, it would be really quite a rapid sell-off. If it doesn't show, it might just mean that it's just a larger sort of pullback in the same structure still, and that maybe the trend lines just change a little bit or something. But yeah, keep an eye on that last swing low there at 2.45, 2.46 cents. That's my update about GALA. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.